The thing is, RWA is the hot topic of this summer. Everyone speaks about it. Yields right now from what we call RWA at that moment in time are based on traditional financial assets. I think as of today, the main underestimated risk is your legal title. This is why RWA can work. Without blockchain technology, a bigger adoption of RWA trading in liquid assets won't work, because you need to have the transparency for new investor groups to be able to evaluate what they trade and what the value is.
Hello everyone, this is Coin Headlines. We are in Expand North Star, and we are here with the CEO of BitMEX, Stephan Lutz. Hello, thank you so much for accepting our invitation. You were giving a speech about the RWA Investors Playbook. Where are the yields? What are the risks, right?
Yes.
What can you say about that?
The thing is, RWA is the hot topic of this summer. Everyone speaks about it because we now see the TradFi assets being tokenized and brought to the crypto native crowd, which is a big thing. So the yields right now from what we call RWA at that moment in time are based on traditional financial assets. So equities, bonds, currencies, that's basically it for now. That's where the yields come from. But the bigger play is, and this is what we spoke about on the panel, is the moment you start tokenizing today's illiquid assets like real estate, private credit, and others.
How does BitMEX see RWAs changing the landscape of crypto trading in the next few years?
I had like a couple of years, the moment someone solves the valuation aspect. So what's, for example, this building worth, right? Then it will exceed even the crypto trading by far.
Okay.
Yeah, because you bring an asset, an illiquid asset, to a liquid market, number one. Number two, we are a derivatives exchange. You put derivatives on top. Derivatives volumes are way bigger than spot volumes. Great opportunity.
What are the biggest risks you think investors underestimate in the RWA space?
I think as of today, the main underestimated risk is your legal title. So do you really own what you think you own, right? So for example, if you have a tokenized equity right now, you don't own an equity. So if something goes wrong, you don't have a legal title to, for example, sue, which you wouldn't want to do anyway, but to sue the executive board of the company, right? So you just have a legal title to the economic performance of this asset, which is great as a start, but it's not like owning something. So when the real RWA play will work once we have legal title.
And the last question, what does BitMEX see the role of blockchain transparency in mitigating RWA risk? That's
exactly the point. You said blockchain technology.
Yes.
This is why RWA can work. Without blockchain technology, a bigger adoption of RWA trading in liquid assets won't work, because you need to have the transparency for new investor groups to be able to evaluate what they trade and what the value is. At the same time, for broader adoption, you need like 10 to 20% of the market really knowing what is going on. The rest will tag along. So not everyone like my kids or my mom, they don't need to read the blockchain. But like the 10 to 20% really professional investors, they need to have that transparency on chain. Then it will work.
What is your advice for investors?
For investors, my advice is look out, and especially for projects that are going to tackle the pricing issue, because when that has happened, then it's the time to look at what you want to invest into digitally traded RWA.
Okay, thank you so much. Thank you.
Thank you very much.
Thank you.